Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock. With news, the IMF has branded China as the main risk to global financial stability. But first, in the US, new orders for durable goods fell in February, and business spending on capital goods was much weaker than initially thought. Those durable goods orders fell 1.7% as demand fell broadly, reversing January's downwardly revised plus 1.2% increase. Orders have declined for 14 of the last 19 months. The report added to weak consumer spending and trade data that indicated American economic growth slowed further from the 1.4% pace in the fourth quarter of 2015. Estimates for the first quarter of 2016 GDP growth are currently below 1%. Yesterday's exposure of details about how some rich and famous avoid paying taxes and launder money gathered steam with startling revelations about Vladimir Putin. Also exposed in the leak include the Prime Ministers of Iceland and Pakistan, an alleged bagman for Syrian President Bashar Assad, a close friend of the Mexican president, and companies linked to the families of the Chinese president. Add to those the monarchs of Saudi Arabia and Morocco, Middle Eastern royalty, leaders of FIFA, and 29 of the 500 billionaires included in Forbes magazine's rich list. Add to that 61 relatives of associates of current country leaders and 128 current or former politicians and public officials. There are no revelations of New Zealanders, however, yet. China is the principal risk to global financial stability, according to the IMF, which says that any shock to China's reported growth will have a big impact on world equity prices. In its latest Global Financial Stability Report, they say the risks of financial contagion from China are still relatively low, but its economic news will have a growing influence on global equities. And yesterday's leak of the IMF German tensions over Greece has forced the head of the IMF to brand the possibility nonsense, leaving the IMF trapped at the table. And the Greeks are now confident that the latest review will be wrapped up in about 2 weeks. In New York, the benchmark US Treasury 10-year yield is unchanged from Friday at 1.77%, but it's falling after a brief rally. At home, wholesale swap rates have sunk to new historic lows, while at the same time risk premiums continued their slide. The combination opens up more of a chance mortgage rates will keep dropping, and savers will feel even more pressure. And not only are CDS spreads for local investment-grade corporate debt falling, they are for our sovereign debt as well. Markets actually rate New Zealand government debt with less of a risk premium than for Australia, a benefit that has been in place since 2014. The oil price is sliding too and is now well under $36 a barrel in the US, while Brent is well under $38 a barrel. The gold price is down as well, now at $1,219 an ounce. And the New Zealand dollar will start lower today too, at 68.4 US cents, 89.8 Aussie cents and 60 euro. The TWI is at 71.5 and still within its remarkably tight range we've seen all year. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.